Hi, I'm Professor Bei Dong from USF School of Accountancy. Today, we're going to cover many topics related with balance sheet and statement cash flows. In this video, we're going to talk about the content and format of the statement of cash flows. In terms of the content of the statement cash flows, there are three basic sections in the typical statement cash flows. They are operating, investing, and financing sections. So you can see that we'll list the operating activities section first, followed by investing sections, followed by financing sections. And then we're going to calculate the total net changes, either increase or decrease in cash from these three sections. And these changes will equal to the difference between cash balance of last year and the cash balance of this year. First, let's talk about operating section. This is the most important section of those three sections in the statement cash flows because in this section we record or list all these cash inflows and outflows related with the earnings from the primary operations of a company. So it is related with the daily operation of a company. The operating cash flow is also called the lifeblood of a company. Cash inflows in this section will include something like money you get from selling your services and or goods, which is very important, your interest income, your dividend income. Cash outflows include your money payments of the inventory purchase, the payment of the interest, and your payment of the income taxes. Next section is the investing section. Investing section is dealing with the cash inflows and outflows of your long-term assets. Long-term assets includes, for example, the property, plant, equipment, debt or equity securities, long-term debts. So cash inflows in this section include, for example, you get some money from selling your property, plant, equipment, from selling your debt and or equity securities, from collecting of long-term debt. Cash outflows include money payments for the purchase of the property, plant, equipment, for the debt and equity securities of other companies, and also the money outflows related with your loan to other entities. The third section is financing section. This section is dealing with long-term liabilities and equities. So it is dealing with your financing activities. So this section we're dealing with the economic transactions related with your bondholders, with your stockholders, and with your note holders. For example, let's say cash inflows. When you issue stocks to your stockholders, when you issue your bonds to the bondholders, when you issue notes to your note holders, you get money. That is the cash inflows in this financing activities section. Cash outflows related with something like you buy back stocks from your stockholders, you pay off your bondholders, you pay off your notes, you pay dividends to your stockholders. These are called cash outflows in this financing activities section. In terms of formats of the statement cash flows, companies can use either indirect method or direct method to present the statement cash flows. However, regardless of the method they are using, their investing activities and the financing activity sections are the same under the both method, which means that the only difference exists in the operating activity sections. So for the operating activity sections, companies can use indirect method or direct method. Under the indirect method, we start with accrued net income, that is the number we see from the income statement, and then after that, we're going to do some of the adjustment. Some of the adjustment is an increase adjustment, some of the adjustment is a decrease adjustment, and finally we reach the net operating cash flows. Under the direct method, we restate the income statement in terms of the cash flows. So in this section, if you prepare the operating sections under the direct method, you show all the cash inflows, all the cash outflows related with your operating activity sections. Here's the example of statement cash flow prepared under the direct method. Here's this company, Northrop. Okay, so we only show this operating activity sections. Okay, so in this operating sections, we have two subsections. One is the total cash inflows. We call it total source of cash. The other one is the cash outflows. They call it total usage of cash. So basically, they actually list all the cash inflows in the first subsection and then minus all the cash outflows in the next subsections and then reach the net cash provided by operating activities. The next example is Coca-Cola statement cash flows prepared under indirect method. We'll only look at operating activity sections. So if you prepare the operating sections under the indirect method, we start with net income. This is the number we see from the income statement. And then after that line, we have all these adjustments. Some of the adjustments are positive, some of the adjustments are negative. Okay. After all these adjustments, what we reach at is the summary line of this section. They call it net cash provided by operating activities. Some people also call it operating cash flows. So this is a statement cash flow prepared under the indirect method. Regardless of the method you're using, the same firm for the same period, they will have exactly the same financing and investing sections. Under the indirect method or under the direct method, they will have exactly the same operating cash flows, the final line number of the section. It's just the way they present the section in a different way.